Is the global economy on the brink of a major shift? In early 2025, the United States, under President Donald Trump, made a bold and controversial decision, imposing a 10% tariff on all Chinese imports. The administration defended this move by pointing to ongoing trade imbalances and the increasing flow of fentanyl into the country. However, China was quick to retaliate, announcing its own set of tariffs on select American goods. These countermeasures included a 15% tax on U.S. coal and liquefied natural gas, along with a 10% duty on crude oil, agricultural machinery, and certain vehicles. This rapid escalation marked a significant turning point in the ongoing trade war between the world's two largest economies. As these tariffs took effect, economic analysts immediately raised concerns about the potential consequences. A prolonged trade dispute could lead to higher prices for American consumers and a slowdown in U.S. economic growth. Some experts even suggested that the Federal Reserve might be forced to intervene by adjusting monetary policy, a move that could have far-reaching implications for the value of the U.S. dollar. But China was not the only focus of Trump's aggressive trade policies. His administration also turned its attention to the BRICS nations: Brazil, Russia, India, China, and South Africa. In a stark warning, Trump declared that if these countries attempted to reduce their reliance on the US dollar in international trade, the United States would respond with an astonishing 100% tariff on their goods. Taking to Truth Social, he wrote, "The days of watching BRICS move away from the dollar while we do nothing are over." Faced with these escalating threats, the BRICS nations had already been working behind the scenes to safeguard their economies. Their chosen strategy? Gold. The BRICS gold rush. Over the past few years, BRICS countries have quietly amassed more than 20% of the world's total gold reserves, with China and Russia holding nearly 74% of that total. In January 2025, China made another significant move. The People's Bank of China, PBOC, increased its gold reserves for the third consecutive month, adding nearly 5 metric tons to its stockpile. This brought China's total gold holdings to 2,285 metric tons, now accounting for 5.5% of its foreign exchange reserves. Interestingly, the PBOC had paused its gold purchases for 6 months before suddenly resuming in November 2024, a shift that coincided with rising global tensions. But China wasn't alone in its gold buying spree. Around the world, central banks were stocking up on gold at record levels. In 2024 alone, they collectively added 1,045 metric tons to their reserves, marking the third straight year in which net purchases exceeded 1,000 metric tons. The motivation behind this surge was clear: global uncertainty. With economic instability and geopolitical conflicts intensifying, central banks increasingly viewed gold as a safe haven asset. As a result, gold prices skyrocketed. Over the past year, gold jumped from $2,500 per ounce to nearly $2,900, with many analysts pointing to China's aggressive gold purchases as a major factor in this surge. Adding to the intrigue, some experts believe China's timing was no coincidence. According to Bloomberg economist David Keyu, the PBOC tends to resume gold buying immediately after major geopolitical shifts, suggesting that these purchases were driven as much by political strategy as by economic necessity. China's long-term plan: ditching the dollar. For more than a decade, China has been quietly working to reduce its dependence on the US dollar, despite repeated warnings from former President Trump. Instead of heavily investing in American debt, Beijing has steadily sold off its holdings in US Treasury securities, shifting its reserves toward alternative assets. Back in November 2013, China held an astonishing $1,316 trillion in US debt, making it one of the largest foreign holders of US Treasury bonds. But by November 2024, that number had dropped significantly to around $768 billion. China's US Treasury holdings fell from $772 billion to $761 billion in just a few months, indicating a continued push to diversify its reserves. Instead of relying on US debt, China has been funneling its money into gold and euro-denominated securities. The reason behind this shift is straightforward. China does not want to be vulnerable to US financial policies. With high inflation in the United States and Washington increasingly using economic sanctions as a geopolitical weapon, China sees growing risks in keeping too much of its reserves tied to the dollar. Trump has repeatedly warned that moving away from the dollar could destabilize global markets and hurt trade relations. However, China is not backing down. Instead, it is doubling down on efforts to strengthen the yuan's role in international trade. Over the past few years, Beijing has struck multiple deals with other nations to settle trade in yuan instead of dollars. This includes agreements with major oil producers like Saudi Arabia and Russia, allowing them to conduct energy transactions using the yuan rather than the traditional petrodollar system. By doing this, China is not only protecting itself from US financial pressure, but also directly challenging America's economic dominance. As more countries begin to use the yuan for trade, global demand for the US dollar could decline. If this trend continues, it could have serious consequences for US economic stability and the global financial order. A global shift in economic strategy, one of the most significant factors driving this transition is gold. China's central bank has been on a massive gold buying spree, stocking up on the precious metal as a hedge against dollar volatility. However, China is not alone. Central banks around the world have been following suit. In 2024, global central banks purchased 1,045 metric tons of gold, marking the third consecutive year that net purchases exceeded 1,000 metric tons. This surge in demand has sent gold prices soaring. Just a year ago, gold was trading at $2,500 per ounce, but by early February 2025, it had surged to nearly $2,900. Many analysts attribute this price jump to increasing geopolitical tensions and economic uncertainty. The effects of China's actions are already rippling across the US economy. By pulling money out of US Treasury bonds and increasing its gold reserves, China is accelerating a process known as de-dollarization. If other countries follow China's lead, the US could face higher borrowing costs and reduced economic flexibility. For decades, the US has benefited from having the world's dominant reserve currency, allowing it to borrow money at lower interest rates and run large trade deficits. However, a steady shift away from the dollar could change that dynamic. The BRICS factor. More nations following China's lead beyond China. Other nations are making similar moves. Brazil's central bank, for instance, has been steadily increasing its gold reserves as part of a broader plan to strengthen its financial stability and reduce reliance on the dollar. This suggests that the trend is not just a China versus US issue, but rather a global shift in how economies store value and protect themselves from financial instability. Over the past few years, a quiet but powerful transformation has been taking place in global finance. BRICS nations, in particular, have been steadily increasing their gold reserves, signaling a move away from traditional reliance on the US dollar. Brazil, for example, made a significant gold purchase in 2023, adding 100 metric tons to its reserves, up from its previous average of 80 metric tons per year between 2018 and 2022. This was not just about increasing its stockpile. It was a strategic decision to shield its economy from currency fluctuations and external financial pressures. Meanwhile, Indonesia, which recently joined the BRICS alliance, has taken a similar approach. In 2024, Bank Indonesia acquired 80 metric tons of gold, a 60% jump from the 50 metric tons it was purchasing annually in previous years. The motivation, strengthening economic stability, and aligning with BRICS' broader goals. But among the BRICS nations, Russia has been the most aggressive buyer. In 2023 alone, the Central Bank of Russia purchased an astounding 300 metric tons of gold, effectively doubling its annual acquisition rate. Facing increased Western sanctions and financial restrictions, Russia turned to gold as a way to preserve wealth, stabilize the ruble, and reduce its reliance on the US dollar. Unlike foreign assets that can be frozen or blocked, gold remains a universally accepted store of value. As BRICS nations continue their shift toward gold, the future of the US dollar and its role as the world's dominant currency remains uncertain.